Right, I'm gonna start the recording right now. You can still see it, right?
Mm-hmm.
Ay, perfecto. One second. All right, guys, good afternoon. My name is Chris Rodriguez. I'm the CEO of Limitless Trading, and this is gonna be our first class ever for Limitless Trading. So, here at Limitless Trading, what we teach is consistency, discipline, accuracy, and financial abundance. So, in order to achieve those goals, we need to understand the most important part of trading, and that is risk management. If you do not have risk management down, what will end up happening is you will lose a lot of money and you will blow up your account time after time after time. I've been trading for almost 6 years now, and I can tell you, and I can attest to this, that if you do not use risk management, you will lose all of your money. And I have blown up several accounts several different times, and each of those times I have learned multiple life lessons. So, what we're gonna go over is how to do proper sizing to prevent blowing up your port. Sorry about that. Understanding and utilization of the stop loss, which is very important. Setting daily profit goals to become a consistent trader, and when to walk away from the market. These four are key to lasting in the trading game and in the market. All right, guys. One second. So the first thing that we all have to learn here is instant gratification. So what is instant gratification? That is the temptation of trading in the later for the now. So this goes hand in hand with trading in the way of the get rich quick scheme. A lot of people want to take trading as a gamble, as a lotto. Oh my god. One second, guys. Oh wow, it goes in the slide. It's alright. Okay, so we couldn't see the PowerPoint for a second, but now we can see it. That's fine. Alright, guys, sorry about that technical difficulty right there. So let me continue. So, a lot of people take trading as a get rich quick scheme. They think that if I put 10K right now, I'm going to have $1 million tomorrow. And that is definitely not the case. You will definitely blow up your account before you even know it. What you see on the internet, what you see on Wall Street bets, that is extreme luck. That is like winning the lottery. Um, if you go in with that mentality, that's the mentality of I'm gonna go to the gas station tomorrow, buy a lottery ticket, and I'm going to expect to win the jackpot. The odds are literally stacked against you by 302 million. So you cannot come in with the mentality in trading of I'm gonna win the jackpot. I'm gonna put my money in now. I want my money now. That is not what we teach here at Limitless Trading. That is not what we strive for here. We teach the opposite. We teach that we get small, steady gains over time, aka compounding, so we could get to those millions maybe a few years from now, depending on how much we start with and depending on how many green days you have versus how many red days you have. So, the problem with a lot of people, why 90% of traders fail and only the top 10% survive and live to see success, is because a lot of people come in with this mentality. They want it now. They want it now, they want it now, they want it now. And that's not how it works. Alright? So there are a lot of traders in here who suffer from the wanting of instant gratification, and I am here to basically end that for them. So I'm going to give you examples. So some examples of instant gratification would be if you have a $1,000 portfolio and let's say you want to double it to 2,000 tomorrow. All right, I'm gonna put all my money on SPX, and I'm gonna gamble without doing any technical analysis, without doing absolutely any research on the stock, without researching price action. So you risk $1,000, all your money in a single trade, in hope for a fast and quick return. You might as well go to the casino for that. Go play crafts, go play something. Okay, at least you'll have fun doing it, right? Because the stock market, when you're gambling, it gives you an adrenaline rush, but it's not that fun. You're just seeing a bunch of candles, you're seeing a bunch of numbers move around, and it's like wow. So another example of instant gratification is you are down 50% on a trade, which by now, if you're down 50%, you should have cut. But instead of cutting it, you average down in hopes to make the money back, which will result in even more losses than if you would have cut in the first place. That's why we have stop losses. So a lot of people, they want to, let's say they put $1,000 in an SPS trade. They lose $500. So then they say, okay, I'm gonna make up with the $500 loss. First of all, your trade is already bad. So you're gonna make up with the $500 loss by putting even more money into it. So you're basically stoking the flames of your losses. It's like if your money's on fire and you're gonna go ahead and put even more money into the fire to make the flame even larger. So how do you cure bleeding? By clotting it up, by cutting it, by basically ending the blood. Don't add on to it. Don't make the cut bigger. All right. So another example of instant gratification is if you always force a trade to be a 100% trade. Okay. This is called greed. So you want to get greedy, and you want every single trade to provide 2, 3, 4, 500%, and you are not satisfied with just being small, daily, consistent gains. Okay. So the problem with this is not every trade is going to provide you 100%. Okay? Not every trade is going to go 2, 3, 4, 500%. All right? They happen. They happen a couple times a week. All right? And like again, if you're going in with this mentality, it's like you might as well play the lottery. You should be happy with a 30, 40, 50% trade, 20, 30, 40, 50, and you get out, you take your money, you walk away for the day, you walk away happy. That is the mindset that you need to have. You cannot have greed. Greed will kill you. Okay? Especially in this game, because guess what? Greed can make you or break you. And just as fast as it can make you, there are people that have gotten greedy, made hundreds of thousands in the markets, even millions. And then that same greed is responsible for them losing every single penny down to the last penny. They get down to zero. Okay? I've seen it happen myself. You'd be surprised. So, the last one, I've already repeated this a couple times, but we have to make this point clear. You come into the market every single day with the expectation of getting rich quick, disregarding the small steps required to get there in the first place. Guys, this is a personal example. I am trying to go lose weight. All right, I have lost a lot of weight already, but I still have a long way to go. Here's a great example, like a real life example. I go for 5 days straight to the gym. I eat on a caloric deficit. I avoid sugar. I avoid garbage. I avoid eating bad food. And guess what? I lose 1 pound of fat. On the weekend, I say, come on, I've worked hard. I've lost a lot of weight. I lost 1 pound. I look better. I feel better. Let me treat myself. Let me skip the gym on Saturday and Sunday. And let me go ahead and, go out to McDonald's. Let me treat myself to a caramel frap. Let me get large fries. Let me get a couple burgers here and there. Before you know it, I already gained 5 pounds. So I retraced my weight loss by around 5 weeks with just one weekend. Because of instant gratification and thinking that I deserve to have junk food just because I put in a little bit of work. So, there you go. You cannot have instant gratification in this game. You will die so fast. You will lose all of your money, and you will get discouraged. You will get disheartened. And guess what? What will end up happening is you will quit this. You will talk bad about trading. You'll be like everybody. Oh, it's gambling. Oh, you might as well go to the casino. Oh, I don't trust that. Oh, that's why a lot of people are poor. There are a lot of poor people because they want to go with these habits Then afterwards, when they don't realize that it's their habits that are killing them, they don't want to take accountability. And then guess what? They want to blame, oh, no, the rich, the Wall Street, this, that, and the other. No, that's not how it works. You have to have self accountability. I personally know people who came from nothing that have made hundreds of thousands of dollars, if not millions of dollars, trading. Why? Because they had the discipline, they had the consistency, and they had the accountability, which is the most important part. All right. So we're going to get into proper sizing. This is very important. This is what you are going to be operating in, trade out. So proper sizing is very crucial in order to protect your capital. So the problem with trading is that it is inherently very risky, and losses can and will occur various times during your trading career. So think of losses while you're trading as inevitabilities of life. Like, for example, the inevitabilities of life is you're gonna die one day. You have to pay taxes. So obviously you have to eat food. If not, also you're gonna die. You have to drink water. Yada 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 yada. So losses are an inevitability. Sorry about that. So the easiest and the best way to mitigate these risks is by using proper account and trade sizing on each individual trade, my guys. Okay? If you oversize, again, it goes back to the greed. Why does somebody oversize? It is because they are greedy. They want the money now, they want to get it now, and they think, okay, I will make more money if I put all of my account in this one trade. And the problem with that is, guess what? The trade, you just need one red candle. One red candle on SPX or SPY or Tesla or Apple. One red candle and you're done. Your whole account is wiped out. You're at zero. You can't even trade at all. You have to wait for your next paycheck, or you have to pull out more money from your savings. It's just not worth it. Why are you going to lose the money that you have right now as your foundation in order to just, okay, now I made 500 bucks. And then the day after, let's say you make the 500 bucks. Then the day after, you keep with the habits, and eventually your luck runs out, and then bam, you lost 500 bucks. So you see the problem with that. Like, you're going back and forth, you're going in circles, you're going in a cycle, and you're not going to get anywhere. You think you're getting somewhere, you're not getting anywhere. Okay? So we have to eliminate that bad habit and that bad mind state about trading and sizing. So most of you here are new to trading. Most of you do not have much money. So I always recommend the beginner trader to start with a $1,000 account. Because with $1,000, you have a lot that you can learn. You have a lot that you can trade with. But it also helps you keep discipline. Alright. So from $1,000, only 30% of your portfolio should be used for options trading. And that means you have a $1,000 account, only $300 should be used for options trading, my guys. Alright? So let's say things go wrong, you're learning, you take losses. In case you blow up the 300 bucks, you still have $700 left. And you're still in the game. Okay? Because if you use all $1,000, things go wrong, you're out of the game. You lost $1,000. $1,000 is a week and a half, almost 2 weeks for some people. So think about it like that. You are losing and cutting out time of your life when you take these kind of losses. So the general rule of thumb, whether you have 1,000, 10,000, 100,000, million, 10 million, 50 million, 100 fucking $1 million in your account, always leave 70% of your portfolio out of options trading under any circumstance. Okay? 70%, it has to be it cash, be it shares in stock, be it in crypto, be it in investment, whatever. Real estate, doesn't matter. Your money in your port, 30% for options. Okay? So, now here's the thing about individual trade sizing. The first rule is under no circumstance should you put 20% of your entire portfolio in a single trade. This is a very degenerate move. And I know people that put 50, 60, 70, 80% of their account in one trade, which is psychotic. All right? All right, guys. So whenever I signal a trade here at Limitless, or any of our analysts signal a trade here at Limitless, we usually put whether it's light, medium, or heavy. So we do this because based on our convictions. So for example, if a trade is very risky or there is not that much direction in the market that we see, or we could be consolidating, we say light. So 5%. So that means that a light trade If you're on $1,000 portfolio, it should be worth $50. You should risk $50. All right. If I say light. Now, medium 10%, heavy 15%. So here are your rules of thumb. You have $1,000. I say light, you put 50. Medium, 100. If I say heavy, that means I'm very convicted on the trade, which is very rare. Okay, I gotta have lots and lots of analysis. I'm talking days worth of analysis, trend lines, price levels, formations on the chart. And there have been times where I say, all right, I have conviction trade, or I say either heavy or conviction. Usually I say this is a conviction trade. So most of the times, whenever I say this is a conviction trade, 9 times out of 10, I have doubled the money. But remember, 9 times out of 10, that one time you could lose it all. So high risk, high reward. Remember that, especially when you're starting out. All right, guys. So the next lesson is stop losses. Stop losses are very crucial to the trading game, and I know many people who do not utilize them. The problem with not using stop losses is that it opens yourself up to stupid amounts of risk. We have to accept that we can be wrong at any time, okay? And usually our ego prevents us from thinking, hey, we're not wrong, or you're down on a trade and you think you're right. It's an ego thing, it's arrogance, but sometimes we have to put our ego to the side and say, okay, we were wrong about this. My analysis did not hit. I did not execute this trade, or maybe I got a bad entry. So the general rule of thumb is you should set your stop loss at 30% of the value. So let's say you have a $100 trade here, right? So you buy it for $1 or $100 a contract. The trade falls 30% of value. So that means you lost $30. So you cut it when the trade hits 0.70 or $70 per contract. All right? So instead of losing $100 because the trade goes to zero, you lost 30 and you still have 70. So you took a very small loss on your total portfolio, and guess what? That's fine. On a bounce of probabilities, let's say you have a 50, 60, 70% win rate per trade. If you're an above average trader, you can sometimes get 80%. At the end of the week, you're going to end up green. So we all have different risk tolerances. We all have different goals. Each of us have individually different goals. My goals are different from yours. My goals are to have extremely big amounts of capital. So I'm willing to open up to more risk. All right, there are some people that just want a decent amount of money. They don't want that much capital, so it's just more convenient for them not to open themselves up to a lot of risk, to a lot of aggressive trading. I am a very aggressive trader. I watch the markets like a hawk to meet my goals. All right. So 30% is the rule of thumb. You can do higher, you can do lower. It's just whatever meets your risk tolerance and your goals. We all have different goals here. You gotta remember that. We all have different goals. We all have different dreams and aspirations. So SPX is an exception to the rule. So I trade SPX every single day. All right. Usually I do end of day lottos because these contracts can move up or down substantially. All right. The price per contract, you could be at $50, and then within 5 minutes you get a couple candles, and the contract is worth $400, $500, $600 from 50. So this is why I usually set my stop losses a little bit higher on SPX, 50%. I'm willing to lose half of my money because I know that SPX is a very liquid stock, is a very liquid equity, and it is zero DTE every single day, meaning it's 0 day to expiry. And this means that once you're getting towards 4 p.m., what ends up happening is theta starts eating the contract. So this makes the contracts, each individual contract, much more volatile with price swings and IV, implied volatility. So as you can see in my last sentence here, I said you can be down 50% on SPX, and all of a sudden you're up 300%. You made 3 backs. So this is why I trade SPX very sparingly, and I definitely have great conviction before getting into an SPX trade. Because just like it can make you a lot of money, it can also lose you a lot of money. Alright, guys. So we have here the power of compounding. So this is another important part. It's all about discipline and habits here. So trading is all about compounding your money day in and day out, guys. The whole game is to avoid red days as much as possible and get as many green days in the door as possible, guys. So This takes discipline and consistency to achieve. All right, this is not easy. This is not simple. You're not going to get it in a day. You're not going to get it in a month. Hell, you're not going to get it in a couple years. All right, this takes day in and day out consistency and discipline. So, usually speaking, my guys, you want to have your life in order before you start taking trading very seriously. I do not recommend trading in a rough area of your life where there's a lot of instability in your life. Let's say you have problems at the house, or you have a relationship problem, or something happened, a loved one died. It could be anything. Anything that life throws at you. Life happens, guys. Remember this. The stock market is going to be here 24/7, 365. The stock market has been around since the 1600s. The New York Stock Exchange, if I'm not mistaken, is older than the United States of America. So the stock market was hundreds of years here before you were born, and it will be here hundreds of years after you die. The market's always going to be here. As long as humanity exists and the world turns, equities markets will exist. Investments will exist. So there's nothing wrong with taking a day off, taking a week off, a month off, a year off. It doesn't matter. There is nothing wrong with that. You need to get your life in order. Everything. I'm saying wake up at the same time, go to sleep at the same time every day. Go to the gym, get a nice body. Just have great relationships with people around you. Have healthy, good relationships. You need to have good mental health in order to be a successful trader. Another reason that this is unheard of and nobody speaks about it, a lot of people fail at trading because mental health is on a decline all around the world, especially in this country, especially in this generation. A lot of people get into it with crappy mental health, and their life habits basically reflect in their trading. If you see somebody losing a lot of money all at once, you can tell that at that moment of their life, it was a bad moment of their life. It goes hand in hand. If you are having rough patches, if you are not mentally stable, if there are things going on, do not trade. Take the day off, the week off, whatever. If you had an argument last night with your girlfriend or your boyfriend, or you had a fight with your mother, or you had a fight with your father, or something happens, your car breaks down, it does not matter. Take the day off. You will lose money because your judgment will be clouded by those external factors out of your control. You do not want a clouded judgment while trading. Things happen very, very fast in this market. I've seen SPY go up 10, 20 points in a single candle before. And people have lost a lot of money because they are not in the zone. Their head is not in the game. They're very clouded. Their judgment is clouded. You cannot let that happen, guys. So, first, organize your actual life first. Get a stable job if you can, to get some money in so your finances are in order. Get in the gym, work out, all right? Do something, accomplish something, and make sure that everything is right in your mind before you get into trading. And you will consistently win. I guarantee it. So, now that you have this in mind that you need discipline, first of all, discipline and order in your life before you should even get into trading. Now I'm going to talk about the power of compounding. So the rule of thumb for compounding is to aim for 3% per day of account growth. Alright guys? 3% per day. That's all you need. Once your Thinkorswim and your Robinhood or your Webull or whatever brokerage says that you have made 3% of your total account in profit, walk away. And I mean this wholeheartedly. You must walk away at all costs. You will thank yourself later. Future, you will thank yourself later. Alright? So if you're starting off with $1,000, that means on day one, you need to make $30. $30 fucking dollars, guys. What the fuck is $30? $30 can't even get you a fucking McChicken. Shit, you can't even take your girl out to a fucking date for $30, bro. Come on now. That's all you need on your first day of trading. $30. That's just a single day trade. You could be in for 1, 2, 3 minutes. Walk away, bro. Get out. So, I already calculated this. If you consistently compound 3% every single day from $1,000 after 250 trading days, remember there are 250 trading days in a given year. All right? Let me highlight this for you. You will have an account worth $696,752 with 99 cents. Guys, most of your houses are not fucking worth $700,000. All right? If you had $700,000 right now, you would be in much different situations, life situations. All right? You get yourself a house in cash, a very nice fucking house in a great neighborhood to raise your family or to retire your mom or whatever. Whatever you want, your dreams. 700K, more than enough to travel the world. 700K is also more than enough to open up whatever business you want to open up. You want to buy a car? Bro, a nice McLaren, 250,000, okay? A nice McLaren. You could retire your parents. You get of those 700,000, you get 200K, retire your parents. Be like, hey, mom, dad, I don't want to see you guys work anymore. Don't work anymore. Go travel the world. Go enjoy your life. That's right. 3% per day for 250 days from $1,000 equals $696,752.99, guys. That's the fucking number. All right? That is the fucking number, guys, that you will make in 250 days. What is 250 days? That shit flies by. If every day you wake up early, at 9:30 you get in the market, bam, 5 minutes. 5 minutes in, you get a nice banger, right? That's it. You see 3%, 4%, 5%. Get the fuck out. Walk. Close Thinkorswim. Close your computer. Walk away. Go to your job. Go do something. So remember, all it takes is consistency and discipline. 3% every single day that you walk in the office of trading. All right, guys. Remember that number, 3%. That's all it takes. Because guess what? Once you get to $1 million, what is 3% of $1 million? $30,000. So if we're using a 10% sizing on $1 million account, that's $100,000. So that means that I only need to hit a 30% trade on a $100,000 play to make 30 grand, and then I make 3% on $1 million, and I have $1,030,000. Just talking in bigger numbers for you because I want you guys to see the bigger picture. All right, that is what 3% means. 3% of 10 million, how much is it? All of a sudden you have 300,000. Who the fuck do you know that's making $300,000 a year, let alone $300,000 a day? Tell me. You can't even think of a name. Doesn't come up in your head. Even some of the famous people that you guys listen to or fucking watch don't make that amount of money. But the people who know this shit from the back of their head, they make that amount of money. And all it takes, 5, 10, 15 minutes every day. You click the green button, you look at the trade, you do your analysis, click the red button, walk the fuck away. Go to Monaco. Go get a fucking yacht. Alright. So since we're talking about walking away now, we're going to go to when to walk away from trade. We have many rules for walking away. Because walking away is the hardest part of the stock market. Because like a degenerate gambler, maybe you have an uncle, maybe you have somebody that you know that just loves to just be at the casino or do sports betting or do something degenerate. It's hard for them to get rid of that addiction, right? The same thing happens in the stock market for us traders. The hardest thing to do is walking away, especially after having a green day. Because our judgment gets clouded and we think, hey, we have a green day, I want an even greener day. All right, my luck is good, let me keep pushing it. This actually happened to one of our members last week. Brian. Brian, are you in this live? Brian Monson. Yeah.
Yeah, I'm here.
All right, bro. So Brian decided last week to trade really good. He hit a very good SPY trade, $70-$80. He has a smaller account. $70-$80. And his account was up, what was it, like 20%? If I'm not mistaken. Yeah, it was like 20%.
Yeah, 20%.
Yeah, it was 20%. All right. So Brian said, okay, I made 20% today on my account, which is fucking exceptional, guys. Those are lottery numbers. If you're making 20% on an account, on any account, I don't give a fuck if it's $100, $1,000, $3,000, $10,000, $100,000. 20% is fucking crazy. Okay, what he did right there was fucking wild. Not everybody can fucking do that. That was pure luck of the draw. So What Brian ended up doing was he said, all right, I'm up 20%. Honestly, let's keep going. Let's keep going. He got the rush, he got the excitement, he got the adrenaline. And eventually he overtraded to the point where, how much were you down, Brian?
3%.
He was down 3% on the day. So he went from being a week of straight gains, 2 weeks worth of gains in a day, to being down a day. So he just relapsed a day back in the same fucking day because he decided to overtrade. So I scorched him in our losses chat. We have a private losses chat in Discord where we can hold ourselves accountable whenever we lose. All right? Because a lot of this is accountability. A lot of us will lie to ourselves thinking that, oh shit, I'm going to keep going, I'm going to stay quiet. No, we have to fucking, just like how we celebrate our wins, we have to we have to just basically put our losses out there. We have to admit defeat. That is what we're here for. That is what the community is here for. That is why we are a fucking family. We are called Limitless for a reason, because the possibilities are fucking limitless. If we see you fucking up, tell us. Go in the chat and say, hey, I fucked up. Hey, this trade went bad. And we will sit down with you, take the time out of our day to help you understand why you lost that money so you could avoid it in the future. Okay? We will do it out of the kindness of our own heart. Because those are the kind of people that we have here at Limitless Trading. Alright? We're a fucking family. So, when you're green for the day, especially like how Brian was last week, 20%. Anything above 4 or 5%, that's crazy. Those are crazy numbers. Those are good fucking numbers. If you are above that, walk away. Turn off the computer. If you have to delete your brokerage from your phone or your laptop, fucking do it. Get away from it. Go out for a walk. I live here in Miami. I love going out for a walk down Brickell Avenue. I start by the Key Biscayne sign, and I walk all the way to Bayside. And I do a walk back. Very beautiful walk. You see a lot of wealth. You see a lot of people. You see a lot of life. Do something like that in your city. Whether you're in LA, you know, New York, whatever. Go for a fucking walk. Get your mind out of the computer. Get your mind out of trading, because you will lose your money. So, now you know when you're green for the day, walk away. But when you're red for the day, walk away. This goes back to psychology and an ego thing. The problem with a lot of people is ego. Andrew Tate said this best. The reason why most of you will never be rich is because you're too arrogant. Arrogance kills you. Being too egotistical will kill you. Why? It clouds your judgment. It goes back to what I said about don't trade with your judgment clouded. If you are too egotistical, if you are too, how do I say this? You're too above everybody else, what's going to end up happening is you're going to think you're never wrong. And guess what? You will be wrong. You will be fucking wrong. I don't care who you think you are. You will be wrong. There are people with trillion-dollar hedge funds. Like last year with Melvin Capital, with the whole AMC and the GameStop debacle. They lost billions in days because they were wrong. And those people have been doing this since before our parents were fucking born. Okay? Even they are wrong. And they're fucking billionaires. What makes you think that you, a little sack of shit, who barely even knows what the fuck they're doing, is going to be right all the time? You're not going to be right. You're going to be wrong eventually. And especially in the beginning right now, you're going to be wrong a lot. Okay? And that's okay. That is perfectly fine. That is why we have these courses. That is why I keep you accountable. That is why you have this community. Because you're going to be wrong. So, when you're red for the day, you're down 1, 2, 3%, walk away. Close the laptop. The same deal. If you're down 2, 3%, that is completely fine. It happens to the best of us. That's basically, you're relapsing, let's say a day. You're relapsing a day. You're coming back a couple days. That's fine. It happens. It's like, it's like if I go on a cheat day with my diet when I'm losing weight. I might get a craving. I lost 30 pounds. Fuck. Let me get a fucking ice cream. All right, I gained 3 pounds back. But then come Monday, I'm gonna go ahead and get on the treadmill again, get back on my discipline, and then I get back on track. It happens. Think of a red day as like a cheat day on your diet. Okay? Make it small, Don't over exaggerate it and don't overextend it. All right. You want out for an ice cream? That's fine. Don't go out for a fucking cake. You went out for an ice cream? Don't go out for a cake. Okay. Don't overdo it because then you will regret it. Because all right, that's fine. I gained 3 pounds. Don't gain 20 because if you gain 20, then you just come on, bro. You're relapsing 20, 30, 40 days worth of gains, and you're gonna hate yourself for it. You're going to regret all your decisions afterwards. So if you're down 1, 2, 3%, completely fine, completely normal. Walk away. Close the computer. All right. So how do we prevent the whole walking away thing? You have to have accountability and discipline for your time spent. All right. So what I do personally, I'm in real estate sales. I'm a real estate agent now. I just got my license back in November, and I just started with my brokerage back in December, and I'm actually working. So I actually have things to do. I have to call clients, I have to prospect, and I have to get them to close out on a lease, or when I get into listings, close out on a listing. You get it. All right. So I know I give myself a time limit. I give myself 30 minutes to trade. All right. So from 9:30 opening bell to 10 a.m., I specifically have that 30 minutes to trade. Whether I win or lose, fine. But I only get 30 minutes. All right. Some of you guys may not be too busy. You can extend it to an hour. I do not recommend to anybody to trade past 10:30 a.m. I do not recommend anybody to trade between the hours of 10:30 a.m. to about 1:30 p.m. If volume is low, any trade that you get into at that time, you are forcing it. All right? Theta is going to kill you. The Greeks are going to kill you, and you will lose money, and you will have no movements. It's just going to be sideways until 1:30 p.m. Everybody comes back from lunch. All the banks come in. Buyers start stepping up or sellers start stepping up. All right? So you need to maximize your daily trade time from 30 minutes to an hour maximum. There are people that will sit 7, 8, 9 hours in front of the computer to get nowhere. Not good. Okay? So anything more than an hour, that is literally considered you're over trading. All right? You're over trading. You're doing too much. All right? That's a lot. So the next step, even if you're green by just a small amount, don't overtrade. Accept your small gains. All right. Let's say you don't hit your 3% goal. You've already done 1, 2, 3 trades. You don't hit 3%. That's fine. Close it out. Tomorrow is another day. Okay. Don't be disappointed that you didn't hit the goal. It's fine. It happens. Happens to the best of us. Tomorrow's another day. Try to hit it tomorrow. If you don't hit it tomorrow, the day after that. But don't chase, because chasing will open yourself up to losses. All right. So just to finish this off, you're right for the day, walk away, realize those losses, and get away from the market. Today isn't your day. You had lessons to learn. Do not revenge trade. Come back tomorrow and try again with your newfound knowledge from those losses. Treat every loss as experience. Treat every loss as knowledge. Okay? People will see losses as something very negative. Oh. Think of it as an expensive, how do I say it? An expensive lesson. Think about it as like going to college, but for trading. All right? The same idea of getting a 4-year degree, 4-year education. It's the same deal when it comes to trading. You're spending money to learn lessons. For example, okay, I shouldn't have traded when it rejected a trend line. I shouldn't have gotten calls if it rejected a trend line. Or I shouldn't have got puts if it bounced off a trend line. You get me? Those are lessons that are going to cost you money. Hard lessons. So, to close this class out, we've been here for 40 something minutes already. To close this class out, daily profit goals and journaling for consistency. Because remember, consistency is the most important part. And that is our mission here at Limitless Trading. That you are a consistent trader. That you can lose your job tomorrow and you are still making money and you can still survive off of your skills. So, what we have here, 3% of 1,000 or $30. Aim to make 30, walk away, and as you compound the 3% of your new port value, set the new target as your daily goal and walk away. So, the last part that I'm going to speak about here is journaling. I recommend everybody to journal everything about their life, not just trading. I recommend everybody to journal their life experiences. Let's say you have a girlfriend, boyfriend, whatever. I recommend you journal that so you can learn your lessons from that. Or you go to the gym. I recommend you journal your workouts, what you eat. I recommend you journal that as well. Whatever you do, any business, whatever you're going into, your job, what did you learn from your job today? Journal the fuck down. Journal it. Right? A lot of people walk through life blind. A lot of people are not living, they're just existing. They don't realize their actions. And the easiest way to realize your actions is if you write it down. So, how does this reflect on trading, guys? Journal all your trades. Journal when you entered, what price. Journal when you exited. Whether you gained or lost, you need to journal that. You need to write that down, whether you are winning or losing. And then you do the math on that. You divide how many trades, how many winners, how many losers to determine your win rate. That is what's going to make you a better trader. The most important part of journaling is journaling your red trades. All right? So, trading options or trading any equity, stocks, whatever, is like a chess match. All right? You're playing chess. You lost money not out of bad luck. You lost money because you did something wrong. All right? Just like if you're playing chess, if you lose the game of chess, you did something wrong along the way. All right? Leading up to the closing of the match, you are doing something incorrect. All right? There was some mistake that you committed. Maybe it was a bad entry. Maybe it was a bad analysis. Maybe just something didn't go right. Okay? Something along the process. You need to hold yourself accountable. Every time you lose in trading, it is completely your fault. It was no one else's fault. It was your fault. There was something wrong with you. All right? There was something wrong in your analysis. Even chess grandmasters lose matches, okay? And they're chess fucking grandmasters. Their IQ level is like 1,000. So a trading grandmaster will still lose 10 to 20% of the time. They'll have an 80% win rate, which is exceptional. But they're still going to lose 10 to 20% of the time. That means in any given month, they can have 3, 4, 5 red days. Any given month. But they're still millionaires. And they still made their millions from trading. So do not let that fucking discourage you. So, journal your red trades. Write down exactly what you know you did wrong. Okay? You know what mistake you did. Subconsciously, when you get into a trade, you will know if you fucked up. So you need to write that down. And you need to read that multiple times after the day is over. Reflect. You wake up. Before the market opens the next day after that, read what you fucked up on. Right? So you don't repeat the same mistake over and over again. Because repeating the same mistake over and over again is just going to result in just constant losses. And I've suffered from this. I'm a very stubborn person. Alright? I have lost on a trade for the same exact fucking reason thousands of times over the years. And I couldn't get it through my head because I never wrote it down. I never journaled it. I never talked to myself about it. When I started journaling and noting down why I lost on my trades, that is basically when I finally saw, okay, I need to stop fucking doing this. Okay, it's a habit. If you do it enough times, it's going to be a habit. So I said, fuck. Okay, I need to stop trading. I need to stop buying puts on a double top. Or I need to stop buying calls on a tweezer bottom. Or on a tweezer top, sorry. Tweezer bottom, you buy calls. I need to stop buying calls on a tweezer top because I'm going to lose money. You know, it's just simple shit like that. Little things like that. And once you have that shit into your mind, you're going to be unstoppable. So, there are online services which are very fucking good, let me tell you. You know, the only problem is you have to pay a monthly subscription between $30 to $60 a month, depending on the service. The best one is TradeZella. So, you can directly connect your brokerage to TradeZella. You know, I think it's like $59.99 a month or something like that. But let me tell you, it is worth every fucking penny. Because they go in depth with analytics. They give you pie charts. They give you graph charts. They give you win-loss percentage ratio automatically calculated. They even show you how much time you are in a trade average, right? How much money you lose on a monthly basis or how much money you're winning on a monthly basis. They give you everything. Like shit that you can't even write down yourself if you even fucking knew it. So I definitely recommend them because it just makes the journaling process a lot easier, automates it, less writing. Me personally, I do have a TradeZella account. and I also write it down at the same time. Because if I do both of it at the same time, it just makes me a better trader. All right, that's just what works for me. You can do one or the other. You know, writing it down is free, and writing it down will get it through your head. But it's definitely awesome to see the analytics at the end of the month from TradeZella, where you can see all your fucking numbers, all your stats. All right, and it also motivates you to keep pushing it and keep becoming a better trader. So I definitely do recommend it. So guys, not to take too much of your time up, in this class we learned a lot today. We learned basically everything that you need to know about risk management, proper sizing, stop losses, daily profit goals, and most importantly, when to walk away. We also learned a little bit about instant gratification. So, do you guys have any questions? Please let me know and I will answer them right now. Okay? No questions? Alright, guys, it's been a pleasure. Thank you for choosing Limitless Trading. I will be in here day in and day out to answer any of the questions that you may ask me. And I'm going to continuously put out winning trades for you guys so we can all get fucking rich. Alright, guys, have a beautiful one.
Bye.
Bye.